Have you ever gotten to the end of a great sales month, but you look at your bank account and wonder where all that money went? You look at your prior month income statement and it shows you had a $10,000 profit, but you only have a couple $100s in your bank account. If you constantly feel confused about where the cash seems to be, quote unquote, disappearing to every month, then the report we're going to talk about today will be a game changer for your business. Let's dive in. Hey there, and welcome to the Boutique Bookkeeper Show, where we take the mystery out of your money and make your numbers make sense. I'm Megan, virtual bookkeeper and bookkeeping coach, and I love helping female boutique owners just like you finally feel confident about the financial side of your business. If you're tired of feeling anxious every time you have to open QuickBooks, or if you're making sales but constantly left wondering, where did all that money go? You're in the right place. We'll cover all things bookkeeping and taxes, all in plain English, so you can be less intimidated by the numbers and finally start to use them to help you grow a profitable boutique. So, if you're ready to stop avoiding this whole numbers thing and start keeping more of the money you make, grab your coffee and your calculator and let's dive in. Hello and welcome to another episode of the Boutique Bookkeeper Show. I'm Megan, and today we are continuing our mini-series on the primary financial statements. So far, we've covered the income statement or the profit and loss statement and the balance sheet, so be sure to go back and listen to those if you've missed them. But the third primary financial report we're going to be talking about today is the statement of cash flows. So many business owners are unfamiliar with this report, but it is so powerful in helping you understand how the cash moves in and out of your business because, if you haven't realized it by now, your P&L does not tell the whole story. Remember, your P&L shows all of your income and expenses over a given period, but not every transaction that flows through your accounts falls into either the income or expense category. Some transactions only affect your balance sheet. The statement of cash flows essentially takes the information on both of those reports, the P&L and the balance sheet, and it presents it in a way to show how the cash, the money, actually moved in and out of your business over a certain period of time or date range. The statement of cash flows has 3 different sections to group the cash flow in your business into operating activities, investing activities, and financing activities. So the first section is the operating activities section, and it actually starts with your net income. That's going to be the top line on your statement of cash flows. And the net income on your statement of cash flows will be the same number as the bottom line on your P&L or your income statement. You just have to make sure that you are filtering for the same date range on both reports. So if you're looking at last month, make sure your P&L is filtered for last month. And then when you compare it to your statement of cash flows, again, make sure it's filtered to last month. So your net income on both reports will be the same number. And then under your net income line, you're going to see line items that show transactions that affect cash from your normal operations. So let's talk through some examples because that's the best way to explain this. So if you are doing proper bookkeeping, your P&L should reflect your cost of goods sold expense, which represents the cost of the inventory you sold in that time frame, right? We talked about that a couple episodes ago when we looked at the P&L. But a huge part of your business is going to be buying more inventory to replenish what you're selling every month, right? So there was going to be a line on your statement of cash flows that shows inventory, and then there will be either a positive or a negative number there. A negative number means that there was a cash outflow, money left your business, you spent it. If the inventory line item is negative, that means that you bought more inventory than you sold that month, meaning your inventory purchases were higher than your cost of goods sold for that time period. That also means that if you were to look solely at your balance sheet, your inventory balance at the end of that period would be higher than it was at the beginning of the period because you used your cash to buy more inventory than you sold. If your inventory line on your statement of cash flow shows a positive number, that means that you sold more than you bought and your cost of goods sold is actually higher than your inventory purchases for that period. And it also means that if you were, again, to look solely at your balance sheet, you would have a lower inventory balance reflected at the end of the period than it was at the beginning. Okay, so that's your inventory, but another item that might be on your statement of cash flows is any credit cards that you use. So the charges that you put on your card likely represent expenses, and they will show up on your P&L when they are charged to your credit card. But with credit cards, you're not actually paying cash for those at the moment, right? The cash doesn't actually leave your account until you make a payment towards your credit card balance. So your statement of cash flow will have a line for each credit card on your balance sheet. And just like your inventory, it will either have a positive or a negative number next to it. A negative number, again, it means that there was a cash outflow, which means that you made more payments towards the credit card balance during that time period than the new charges charged to the card. It means that your credit card balance is lower at the end of the period than it was at the beginning. Or if it's a positive number, it means that you put more charges on the card than you paid off during the time period. So you got the quote unquote benefit of the tax deduction expense on your P&L, but you didn't actually have to pay cash for it, or at least pay cash yet for it. Your statement of cash flow may have other lines under the operating section for other items such as sales tax liability, which will show whether you collected more sales tax from customers or paid more to the state during the specific time period, or it'll show other short-term liabilities that are specific to your business. But the concepts are the same. If it's a negative number, the money left your business. If it's a positive number, there's likely an expense that's reflected on your P&L that you did not pay cash for in that time period. So all of those items are typically reflected in the first operating section of your statement of cash flows. The next section is going to show the investing activities, and this is typically used to show any more significant funds that are reinvested back into the business through asset purchases or sale of these types of assets. So remember, larger assets belong on your balance sheet, so the purchase of them does not appear on your P&L when you buy them. This could include purchasing a new point of sale system or a computer system for your store, upgrading the security system in your store, or maybe even you buy a van or a truck or a trailer to do mobile events. If you invest in some type of upgrading equipment or other asset purchases, you will see negative numbers here on your statement of cash flow representing that cash outflow to purchase those items. And then if you sell any of these items that you previously purchased, you have the cash inflow of you selling those items. It will be reflected as a positive number here under the investing activities. The final section of the statement of cash flows is the financing activities, and this includes any other payments related to your debts or to the owners. And again, just like the other sections, any negative numbers represent a cash outflow or cash leaving your business, and any positive numbers represent the money coming in. So if you ever deposit your own personal money into the business, or if you receive a business loan of some type, these lines will be listed under the financing section, and they will be reflected as positive numbers representing the money coming into the business. Any payments that you make to pay down your debts or to pay yourself in owner's draws, those will be listed as separate line items here as well, but they will be negative numbers reflecting the money leaving your business. So if you make a mortgage payment every month for the building that you own, any principal payments that you've paid will be reflected in this section, not on your P&L, because remember, your P&L only shows the deductible interest expense, not any amounts that are applied to the principal. That will be shown here on the statement of cash flows. If you've withdrawn any other funds out of the business outside of payroll to pay yourself, just transferring money into your personal bank account, those amounts will also show up here as a negative amount, reflecting the money leaving your business to pay yourself through draws. So each of these three sections is going to be totaled up, showing the net cash increase or decrease for those types of activities, operating, investing, or financing. And then at the very bottom of the report, all three of these sections will be totaled up to show the overall cash increase or decrease for the business for that time period. And this cash increase or decrease will also tie out or match your balance sheet. So if you look at your total cash balance at the beginning of the period that you were looking at, and again at the end of the period that you are looking at, the net change, that you see on your statement of cash flows will make up the difference in your beginning and ending balance for cash on your balance sheet. If you're more of a visual learner, I go through a real-life example of the statement of cash flows along with the balance sheet and the income statement or P&L in the free masterclass that's available on my website. So if you want to actually see what this looks like, go ahead and register and watch it at findingfreedomfinancial.com/masterclass, and I'll also link it below in the show notes for you. So if you're constantly left wondering where all the money in your business seems to be quote unquote disappearing to each month, or you never really understand how you can be showing a profit on paper but not on your bank account, I really want to encourage you to start looking at this statement of cash flows for your business. This report, although it may be a little confusing at first, it will become your best friend as you start to feel more confident in managing the money and the cash flow in your business. All right, that's all I have for you today, but be sure to tune in next week for another episode of the Boutique Bookkeeper Show. I will see you there. Hey there, and thanks for hanging out with me today. I hope that I shared something that helped you feel just a little bit more confident in understanding all the numbers in your boutique business. If you found this helpful, don't forget to go and leave a rating and review on Apple Podcasts. That's the best way for other boutique owners just like you to find this podcast so I can help them feel just a little bit more confident in their numbers as well. If you have any questions about what you heard today, hop on over to Instagram and send me a DM at Finding Freedom Financial. I'll be back again real soon, but in the meantime, go implement or take action on something you learned today. I promise your future self will thank you.